I'm Priscilla Barrera with the Investing News Network, and here with me today is Caspar Rawles, analyst at Benchmark Mineral Intelligence. Thank you so much for joining us today.
Thank you for inviting me.
So my first question for you is, Cobalt has made news headlines this year, supported by a strong electric car demand outlook. Are there any factors that could derail the Cobalt story at this point?
No, I don't think so. I think we certainly already know the technologies that are going to be involved in the models that have been announced and to be announced by auto manufacturers, and that's really the growth for the industry. And you know, they all contain cobalt in some form or another. So it's certainly, at this stage, I don't see anything changing that.
All right, and cobalt supply for the lithium-ion battery market continues to be a concern. Where do you expect new supply to come from? Do you still forecast the DRC to be critical for supply?
Yes, definitely. So we actually forecast the DRC to become a bigger portion of the cobalt supply pie, if you like. They actually become more dominant in the near term, and that's primarily from Katanga, Glencore's project, and the RTR project, which is ERG's tailings project in the Congo as well. But having said that, there's certainly scope for companies outside of the DRC to bring supply online, and it not only is it needed, but it also for the CSR reasons that have been discussed about the DRC, and particularly with the political landscape out there as it is at the moment. There is certainly scope for people to be investing outside of the DRC.
All right, and what is the investment landscape in the cobalt market? Is there a lack of investment like we see in the lithium market?
Yes, cobalt's a difficult one because of its byproduct nature. So there are a few development projects which are primary cobalt focused, but certainly it's associated with copper and nickel, and it's generally a case that even if it's a cobalt focused project, you're going to have large amounts of either copper or nickel to deal with, and those are very big and very difficult markets to get into. So it's hard for investors to even get into the cobalt space in any form. So yes, there is a lack of investment, and it is a difficult market to get into.
And you've mentioned before that you're expecting the market to be in deficit by the next decade. Is that still your forecast? And are there any factors that could push the market into deficit sooner? Yeah,
certainly. I mean, since we last spoke, I think there's been a big number of vehicle announcements from auto manufacturers, and the type of numbers that they're talking about means that we're going to be revising our cobalt demand figures into the future. And I still think that critical point is around 2020, where the majority of these new EVs and to some extent PHEVs, but really the EVs are the ones that are going to make the difference, are going to come to market, and that's where from 2020 onwards, we really see deficits that could be quite significant.
Right. And as battery technology continues to evolve, do you expect cobalt to be replaced in lithium-ion batteries at some point?
Certainly, well, I don't expect that to happen, certainly by the mid-2020s and even up to 2030. We don't really see any kind of big shift in the technology. It'd be refinement of the technology we already have. So as has been talked about a lot at the Cathodes conference here, we've seen the push from the 111 formulation of NCM moving to 622 and 811 ultimately, but I think everyone agrees that that's not quite here yet. So we'll see the cobalt intensity in sales won't be as high as it is now, but the volume of sales are going to significantly outweigh that. So I don't expect it to disappear. It will just be, there'll be less per cell, but far more sales, so the market's still going to grow.
All right, and this year, as you said, there were many announcements from different car makers about future electric car models. What is your opinion in terms of electric car adoption from consumers?
That's a good question. I think certainly we're looking at a situation where people are more open to electric vehicles for a number of different reasons. As a company at Benchmark, we try not to model adoption in many ways because it's a very complex thing to do. Consumer preference is typically very hard to model. We actually try and look at capacity that's going to be installed and utilization rates, and then therefore what can actually be produced. So we look at it more from a supply side, from top down, rather than looking from the consumer up. But I certainly think that as the EV story becomes more and more in the media, and people are more open to having an EV rather than a traditional engine car.
Right. And we heard BW recently announced it will be invest billions in battery development, and it's looking for raw material suppliers. Do you expect this trend from car makers looking directly for upstream suppliers to continue or be more common in the near future?
Yes, certainly. I think that's a format that we're going to see more and more as time goes on, and the main reason for that is security of supply. So VW made an announcement, and as you say, and part of that was 150 gigawatt hours of cells by 2025. They're modelling, or more than 150 gigawatt hours. And when you look at these markets and how much they're going to have to grow to meet those kind of numbers, certainly there's really big question marks on if there's going to be enough material around. And one way of doing that, and it's what VW are doing, and I think other car manufacturers will follow, is to invest upstream and to secure your supply that way, rather than relying on cell manufacturers or cathode makers to do that work for you. So I think we'll see some vertical integration across the board, because there's so many question marks over security of supply at the moment.
All right, and lithium expert Joe Lowry has mentioned that current battery companies want to negotiate from strength, but they need to understand that suppliers are in the driver's seat. Is that similar in the cobalt market?
Yes, certainly. I think that's the case. It's no secret that cobalt's a very in-demand material, and orders are going through the roof. And I think that has been a change that we're seeing in the market at the moment. I think contract negotiations have started earlier, and that's partly driven by the fact that purchasers know that they're not in the driving seat anymore, and they want to be the first one to the table to make a deal with suppliers. And I think the terms are going to be moving more favourably towards to producers, rather than where historically I think consumers had a lot of power in the cobalt market.
All right, and cobalt metal prices have been surging since the beginning of the year, but I know that Benchmark Minerals also reports on cobalt chemical prices. Can you briefly explain the difference, and which one should investors follow?
Yes, exactly. So at Benchmark, we produce a cobalt sulfate price. Cobalt sulfate is, so in a lithium-ion battery, there's no cobalt metal, it's just the chemical that appears in the battery, and cobalt sulfate is one of the preferred feedstocks for cathode manufacturers in the battery industry. The prices are obviously intrinsically linked, because if one was far cheaper than the other, the industry would just buy that. You can buy metal and dissolve it down with acid and turn it into a chemical. But there are differences in prices, and that's controlled by a number of factors. I won't go into too much detail here, but what's important to realise is whilst China refines over 50% of cobalt materials, they actually produce 80% of the world's cobalt chemicals. And a lot of their feedstock for that comes from concentrates from the DRC. So factors that are only impacting the DRC in China can have a real impact on the prices of chemicals, and that's really where they're traded. So there are, whilst as a long term the prices won't deviate too much, but if you were to look at our cobalt sulfate price chart and put it against a metal price chart, there are some significant differences there. So from an investment perspective, metal is probably the one that's easier to get into, although there's not that many options, but cobalt sulfate is certainly something that I think people should look at if they're really trying to get specifically into the battery space.
And finally, do you expect that cobalt price to continue to increase in 2018?
Yes, I think pressure is definitely upwards, and as we move into 2018, demand is only going to continue to grow. I've already mentioned VW, but there's GM have made a big announcement about their EV numbers, and Daimler as well, and as that grows from other auto manufacturers will have to do the same. So we're looking at a demand scenario which is just growing exponentially. One of the most, I think, a key factor that will affect prices next year though is how Glencore bring Katanga online in terms of how much material and exactly when it happens. There's still some question marks around that. So that's one to watch closely, which could have an impact on prices, but pressure's definitely upwards.
All right. Thank you so much for joining us today.
Thank you.